Good morning. Welcome back to Venture Daily, the fastest way to catch up on everything that matters in tech, startups, and venture capital.
Founders, funders, and fans of the future, this is your morning jolt of insight, stories, and straight talk, news you can actually use, guests who know their stuff, and zero time for fluff.
Let's get you smarter before your first meeting. On today's show, NVIDIA is doubling down on Taiwan with a new AI supercomputer and a new cutting-edge headquarters, signaling big bets on the island's tech future.
And the Pentagon is pushing smart new tech to power autonomous drone swarms, aiming to revolutionize battlefield operations with AI-driven machines.
It's Wednesday, May 21st. Let's run with purpose today and win the prize.
Jackson, how was your Tuesday?
Have you seen the Final Destination movies before?
I actually have never seen a Final Destination movie. Why? Did you watch one?
I watched the newest one last night, Final Destination Bloodlines, and
Okay.
I won't go into it too much, but it's a fun watch if you're, if you don't hate gore. It's pretty gory.
Okay, great. All right. Well, before we jump in today, a quick word about our sponsor, Public. If you take investing seriously, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 7% or higher yield you can lock in with a bond account. Public is a FINRA-registered SIPC insured platform that takes your investments as seriously as you do. Jackson, you can fund your account in 5 minutes or less at public.com/venture and get up to $10,000 when you transfer your old portfolio. Wow. Paid for by Public Investing. Full disclosures in our podcast description, and check out our link in the description.
Yes.
Go to public.com/venture.
Please do.
That's right. Public.com/venture. That's our link. Let the lovely people down at Public know who sent you.
Yes,
it's
that's
us at Venture Daily. Really helps support the show. And now for today's first story. Jackson?
Yep. On Monday, NVIDIA CEO Jensen Huang made a few big announcements on stage at Taipei's Computex Tech Show in Taiwan. He started by reaffirming his commitment to Taiwan, announcing the construction of a new local headquarters in Taipei.
He also revealed plans for a massive AI supercomputer, which NVIDIA will build in partnership with Foxconn's subsidiary, big innovation company, and the Taiwanese government. This supercomputer will use 10,000 of NVIDIA's latest Blackwell chips.
That's a pretty massive investment, likely running into hundreds of millions of dollars just based on what each of those chips cost, aimed at powering Taiwan's entire tech ecosystem.
We are growing beyond the limits of our current office, Huang said, as he introduced a video of the design of their upcoming Constellation headquarters in Taipei.
Oh, but that wasn't all. Huang also announced the NVLink Fusion initiative, designed to combine NVIDIA's tech with custom products from competitors.
This move would open up NVIDIA's ecosystem to new chip players while cementing its technology as the foundational infrastructure powering their products.
Yep. Huang explained that the new feature allows competing chips to plug into NVIDIA's GPUs and NVLink networking tech, which connects chips across servers.
While Hang was on stage, he joked that, quote, "Nothing gives me more joy than when you buy everything from NVIDIA, but it gives me tremendous joy if you just buy something from NVIDIA."
Yes, just something. When asked about NVIDIA's plans to adapt chips for the Chinese market under tight U.S. export controls, Huang said the company is still figuring out how to approach China, but currently can't modify the H20 chip any further.
Reports suggest NVIDIA is considering new chip designs and investing in a research center in Shanghai, signaling its intention to keep a foothold in China despite these regulatory challenges.
This blend of global investment, innovation, and navigating geopolitical tensions highlights the complex balancing act NVIDIA is managing amid the AI race. Now, what do all these moves mean for NVIDIA's future? Well, I invited Jason Warner on the show to talk about it.
I'm Jason Warner, one of the co-founders at Poolside and former CTO at Github.
So Jensen Huang just went big in Taiwan, a new HQ, a massive AI supercomputer, and praised for the island's role in global tech. So I asked Jason, do you see this as a geopolitical hedge, a supply chain play, or a branding move, or maybe all three?
I'm sure there's elements of all of those inside of there, but I actually think there's something probably even larger at play here, which is we're in a weird time in technology. It's a very specific moment in time where essentially artificial intelligence is rewriting and rewiring so much of society. And because of that, there's effectively three things that really, really, really matter for a lot of folks, if not everybody. over the next 10 years. The first is access to electricity and energy. The second is massive computing infrastructures to train and run neural networks. And then the third is effectively what I call emergent intelligent layers. So artificial intelligence become these kind of global networks. And that last layer needs those first two to power it. And from a geo perspective, from a global perspective, this becomes a national security thing. This is all about securing our own future here. I don't know what Jensen's thinking here. He's probably got all of these at play. But of all the conversations I care about, it's always access to gigawatts. It's always about computing infrastructure. And it's always about the most capable artificial intelligence on the planet.
Yeah, I thought that was a really compelling way to frame it, not just as a geopolitical chess move, but as a response to this broader AI arms race, access to power, compute, intelligence. That's the new oil, steel, and internet.
That's right. Yeah. When you think about it like that, Taiwan's not just a manufacturing partner, it's a critical node in that whole stack.
Yeah.
It's not just about where chips are made, it's where the infrastructure actually lives.
Right. So it's less about one company strategy and more about who controls the building blocks of the future.
For sure.
The partnership with Foxconn and TSMC seems like a power play to anchor NVIDIA even deeper into the global AI stack, especially with NVLink Fusion. It feels like NVIDIA is trying to be both the platform and plug-in. So I asked Jason, do you think this solidifies their dominance, NVIDIA's dominance, or opens the door for more collaboration across the chip ecosystem?
I don't know if it solidifies their dominance, but what I say is it's a very smart move. It's a tightening, it's a closer relationship. But what I also think is, when you're in pole position, what do you do whenever you're in a market in pole position? Well, you broaden and you deepen. And so they're doing both at the same time with a move like this. Obviously it's going to pay dividends long term. I think it also pays dividends short term because effectively it causes partnership cascade. One partner does one thing, another partner has to do another. There's domino effects. And this is actually interesting because while they are one of the largest companies on the planet, most mega companies don't dictate terms to the market. They react to startups, which is a fascinating thing. Most very, very large companies are never the ones to lead. They typically see what somebody else is innovating on and try to fast follow copy or buy. This is different. They're trying to lead.
Yeah, I liked what he said about when you're in pole position. The smart moves to, how he said, broader and deepen. And that's exactly what NVIDIA is doing. And they're not just protecting their lead, they're trying to expand it in a way that triggers a cascade of partnerships.
Right. I wonder if he's an F1 fan. Pole position, I haven't really heard that outside of...
Really?
Maybe that's
I'm not an
common
F1
jargon.
guy, so I don't know.
But what stood out to me was he's talking about leadership, right? Most mega companies react to startups. They copy, fast follow, or acquire, but NVIDIA is actually trying to lead the market here, which I think is pretty rare. It's aggressive. It's a signal that they're not just waiting around to get disrupted themselves.
Yep. And with Trump pushing hard for AI infrastructure to be built here on U.S. soil, I was curious if Jason expects the president to maybe seek to punish NVIDIA, maybe through tariffs or regulation for continuing to invest so heavily in Taiwan instead of bringing more AI infrastructure back to the United States.
I don't have insight into that side of the fence at all, so it's very difficult for me to say what anybody would or wouldn't do. My projection, though, based on what I've seen in the administration, is that they understand one thing above all else, which is the global race for artificial intelligence is on, and we need to be the winner there, and we can be the winner, and we should be the winner. And so I think all conversations with all folks like myself or with like NVIDIA or like Elon are all around making sure that the United States wins.
Yeah, that felt like a pretty diplomatic answer, but I would say an insightful one. Jason's basically saying the North Star for this administration is winning the AI race, and everything else, including where NVIDIA builds, is secondary to that.
Yeah, it makes sense. I mean, if you're in DC, you're thinking about global AI dominance, and you're not trying to alienate the one company that's shipping jet fuel for that race. You might push them to build here, but you're not trying to kneecap them.
And I wanted to dig deeper into this, so I asked Jason if he thinks political blowback is a real risk for American companies trying to stay global.
I think the only time you should and probably likely do get political blowback is if you're working directly with China. Because at the end of the day, if you net it all out, that's the thing that matters. It's US versus China. And if you are working directly with China, that should open a set of doors that the company who is working directly with China might not want to invite. I don't think being global necessarily is the issue. I think China is the issue. I'm an American corporation. I do work globally. I just do not ever work in China. Now, that's for my own reasons, that's for the own political reasons of the company, but that's also for national reasons. And I think that holds for most folks.
So that's the line he's drawing. It's not about being global. It's about being tied to China. That's where the real political heat comes in.
Yeah, that honestly seems to reflect how a lot of folks in the U.S. government are thinking right now. You can build in Taiwan, the Gulf, wherever, really. Just don't build strategic tech for Beijing. That's the red line.
Yep. Thank you to Jason Warner for coming on the show. We really appreciate it, man.
All right, next up, the Pentagon is betting big on smarter machines. This week, Applied Intuition announced 2 new products, Axion and Acuity, designed to fast-track how the military develops, trains, and deploys autonomous systems.
Axion is a cloud-based software suite made for building military-grade autonomy. Acuity is the output, real-world code, and AI models that can actually control systems on the battlefield, from drones to ground vehicles.
Think of it like this. Axion is kind of the lab, Acuity is the soldier, and Applied says this combo could dramatically shorten the time between testing and deployment.
Yep, the DoD has long wanted to integrate AI across the force, but limited infrastructure, both digital and physical, has held it back. Applied's new tools aim to fix that.
Right. While the Pentagon's shown growing interest in startups, the jury's still out on whether it'll really scale with newer, faster players like Applied.
For more on that, Josiah, I talked to Dan Magy.
Thanks for having me on, Jackson. So my name's Dan Magy, and I'm the founder and CEO of Firestorm. We build attritable drones out of containers.
Yep, so Dan's company, Firestorm, specializes in drone technology for the battlefield. Firestorm's drones have AI autopilot integration, so this is absolutely Dan's wheelhouse.
Absolutely.
Given Dan's experience, I asked him if he thinks these new simulation and autonomy tools reflect a broader shift in how the DoD is approaching battlefield AI.
Yeah, I think it's the first we'll call it the first inning of the ball game, right? They know they need this technology. You can watch the war in Ukraine kind of live every single day, and you're starting to see kind of similar sorts of technologies be deployed across the front. So yeah, I think this is, again, the first step in kind of a broader kind of movement towards autonomy across the DoD.
Jackson, tools like these are the DoD's first real response to the kind of drone warfare we're seeing play out in Ukraine.
Yeah, there are several innovative companies like Applied and Firestorm making frontier tech here in the U.S., but is our current military infrastructure ready to adopt systems like Axion or Acuity? So I asked Dan that question and asked if he has run into similar hurdles when deploying Firestorm's own technology.
You have like these pockets of resistance that understand kind of technically what's going to be required. And then you have a bunch of folks who just want to wave a magic wand and let this happen. With all types of quote unquote autonomy, the inter-unit communication seems to be something that I think we need to spend a lot more time developing and thinking through. A lot of folks are like, they'll just communicate on RF. Well, RF, kind of as we know it, doesn't really get to exist in near-peer conflicts. And we're seeing that kind of every single day in Ukraine. So again, I think we need to move from the walk and the crawl to the run really quickly here. But that being said, we need to understand the reality of what would it take to upgrade legacy systems as opposed to just buying brand new things. And I'm not saying there's a right answer or wrong answer for either of those things, but that's what needs to be thought through.
Yeah, what stood out to me was that gap that he pointed out between people who get the technical hurdles and others who assume that this stuff just magically works.
Right. What are you saying about RF? The battlefield isn't a lab. These systems have to work in messy, contested environments, and legacy gear isn't always ready for that.
Yeah, and the article from Axios, Applied's CTO, Peter Ludwig, is quoted saying this: live testing simply can't keep pace with the modern battlefield. He went on to say that digital first development and integration are essential to scaling unmanned systems. I thought it was interesting, and I wanted to ask Dan about it. I asked him, how important is simulation versus real-world deployment in validating military grades autonomy or control systems, especially in safety-critical settings?
General Mattis, even though he doesn't write any code, always said it best. He wanted his troops to fight 50,000 bloodless wars before they go into battle. And I think that's where simulation can play a really, really important part as we kind of work through this stuff. It's one of the things we invest heavily in Firestorm, right? Which is ingesting real world data and then running tons of simulations before we do our flights. And I think you're going to see that become kind of a very common approach as we refine and build these models out.
I love that Mattis quote, 50,000 bloodless wars before the real thing. I'm bought in on that one. I like that.
Makes me wonder about the innovations we may soon see in live testing of weapons and systems, and if we'll ever see live testing actually catch up to the pace of the modern battlefield, or if the gap is just only going to widen over time.
Yeah. For my last question today, and I asked him if he was seeing a broader appetite from the government to buy from fast-moving commercial players like Applied, or if this is still the exception rather than the rule.
I think the jury's still out. Okay, Applied builds really good, really good stuff, and they have a really good team. But, I think we actually need to see the department start taking like additional steps to start, they should be swiping the credit card to bring agile companies in at a quicker pace, because a lot of the legacy players just are not cutting it today, right? So I think it's a good first step, but I think it's TBD with everything involving the DoD.
Thank you, Dan Magy, for coming on the show. Yeah, the jury's still out really sums it up. You hear a lot of talk about working with fast-moving startups, but it's not always clear how often that actually turns into real contracts.
Yeah, we get why it's complicated, but if the legacy players aren't delivering, like Dan said, you'd think there'd be more urgency to try something new, and it seems like this announcement from Applied is a good step in the right direction.
Yep. Story number 3 for today, and a notable development for consumer internet startups, Creator Ventures has announced the launch of its second fund, securing $45 million, more than double its initial fund. And what I learned from Sasha during the interview was, I think their first, if you could call it a fund, just $1 million. It's like a pool together of a bunch of people together. And then the second one was like, I guess, their first real fund.
Yeah. Founded in 2019 by Sasha Kaletsky and early YouTube star Casper Lee. Yes, you heard that right. Casper Lee, someone 14-year-old Josiah watched religiously on YouTube. Yep. Creator Ventures has a track record of backing successful startups like AI audio company 11 Labs and eco-friendly deodorant brand Wild, which was acquired by Unilever for approximately $286 million.
With Fund 2, the firm plans to continue investing in consumer-facing companies, placing a particular emphasis on AI-driven applications. But instead of telling you about it, let's hear from Sasha, co-founder and managing partner of Creator Ventures, who I invited on the show.
I'm Sasha Kaletsky, co-founder and managing partner of Creator Ventures.
I asked Sasha, with your second fund more than doubling the size of the first, what shifts in the consumer internet landscape or your investment thesis prompted the significant increase?
There's a few things. There's the kind of Creator Ventures reasons, and there's the market reasons. The Creator Ventures reasons is, we started off in 2019 with a $1 million pool of capital, which was an investment club. Is how we started, and then we tried to invest that as well as we can. And we had some good luck, and so that became a $20 million fund 1, which we raised in 2022, and now that's a $45 million fund 2 that we just raised. And so part of that is just because of our own growth as investors and as people, and because of the good fortune we have within our portfolio. I think the argument for having a larger consumer fund in this market really comes as a result of AI. I do think since the launch of ChatGPT, which is obviously the biggest consumer launch pretty much in history, there's been this kind of thousand flowers have bloomed of consumer tech startups in AI, and we want to be right at the heart of investing in them.
I also asked Sasha, you backed Wild, which got acquired by Unilever, and 11 Labs, which is blown up to a $3.3 billion valuation. Those are some pretty big wins. So I asked him, how did those deals come together, and did anything about those experiences shift how you think about spotting breakout consumer companies?
Yeah, so I mean, we've had some great investments. Wild was through our investment club in 2019. We started in 2019, and 11 Labs is a check in our fund 1. But yeah, I mean, it's the same principles. It's great founders. It's ideally big markets and things that we understand. And we've made a lot of mistakes. We've not invested in a lot of great companies, and not all our companies have worked out. But generally, when we've invested in great people who are building big markets, it's tended to work out.
Josiah, every VC has wins and has losses, and I was curious about what Sasha has learned from those losses. And so I asked him, any misses from Fund 1 that really taught you something?
Yeah, the biggest misses, which I won't go into too much detail on, but the biggest misses are the ones you don't do, and we've not done some big ones, including ones we ended up doing later. So huge, with huge regret. But yeah, the misses really are, you have to keep getting better. Usually what you've missed is some kind of optionality that the team has that you didn't realize they could do. So they can pivot in a different direction, or they can grow in a way that you didn't expect, or generally they can overachieve your ambitions. And so I think it's really, really important as a VC to kind of think about what can go right versus what can go wrong, because that's where it really hurts.
You got to have a short memory. On to the next one.
That's right.
On to the next play. Sasha also mentioned AI-powered consumer apps. They're a big focus for Funtune. So I asked him, what's got you most excited about this space right now?
There's so many. I mean, we're really interested in App Store apps, so consumer apps. There's a stat we like to give is $1 trillion of spend has gone through the iOS and Android app stores. Even if it's only 10% of that end up going to dedicated AI native apps, that's a lot of unicorns and decacorns being built. So we're really excited about AI apps. We're excited about AI avatars. We're invested in a company called Practica, which is an AI language learning avatar company, and Creatify, which is an AI video ad agent. So AI video is a very important theme for us. You name it. Every category in which there's a large consumer app incumbent, a lot of the time there's going to be ways for an AI native company to play that differently and hopefully take some share. And that's going to result in a lot of big companies being started right now.
Thank you, Sasha, for being on the show.
Yeah, thanks so much, Sasha. That was very interesting to kind of get an inside look at the new fund.
Yeah, you made a 14-year-old Josiah really, really happy.
All right.
Josiah, we never do this. Our show always brings 3 stories to millions of listeners every morning, but I couldn't help myself today. I was begging audience. I was begging Josiah last night for this 4th story. We had to do it. So we have a quick 4th story for our listeners.
I mean, rules are meant to be broken, right?
Exactly.
I've actually never understood that phrase, but rules are specifically not made to be broken, but we're going to do it.
Whatever. We're doing it today. Josiah, venture capital activity is experiencing a significant slowdown at the seed stage. According to Carta's Q1 2025 report, the number of seed rounds fell sharply, dropping 28% compared to Q1 of 2024.
And those companies that did raise fresh seed rounds only pulled $1.2 billion total, a 37% drop from last year. More not so fun news, nearly half of all seed deals in the first quarter were bridge rounds, 46%, the highest rate ever recorded for any stage.
Yep, this trend indicates that startups are delaying new priced rounds, awaiting more favorable market conditions. But it's not just a seed stage story. Carta also found that founders are giving up less equity across the board. The median Series A now dilutes 17.9%, down from 20.9% a year ago.
That might sound like good news, more ownership, right? But it also points to a tighter funding environment. Founders are raising smaller rounds and stretching them longer.
Just look at Series B. The median company now waits 2.8 years after their Series A to raise a B. Longest wait on record. That's a sign. Fewer rounds, more pressure to make each dollar count.
Despite the slowdown in deal volume, median pre-money valuations have increased across stages. At the seed stage, valuations rose by 18% year over year. Translation, the most desirable startups are still having little trouble attracting investors.
That's great news, right? However, the median time between Series A and B rounds has stretched 2.8 years, also the longest stretch ever recorded. Josiah, founders without a track record or traction seem to be getting squeezed. So I wanted to get an investor's take on this, so I called our friend Jeff Becker.
Jeff Becker, I'm a general partner at Antler.
I asked Jeff, do you think this higher bar is a healthy correction, or are we losing good ideas too early?
No, I think great founders find a way through. There's access to capital in different avenues. It doesn't have to be venture. I just think that great founders are resilient and tenacious and find a way to find the capital they need. On that comment of bridge rounds, I think there are founders that maybe they raised too much in their seed, and so they haven't grown into the valuation they would need to get to that next round. But the ones that are great are finding a way to close that bridge or find that way to close the extension round. It's really just to kind of live to see another day. First rule of starting companies, don't run out of money.
Yeah, I like how Jeff phrases that. Great founders find a way. It don't matter.
Yeah.
They make it happen.
Yeah. I mean, just living to see another day sticks out. It's not always about hitting a home run on your first swing. Sometimes it's just about staying in the game long enough to take another shot.
I also wanted to ask Jeff about the stat that startups that raised a Series B in Q1 of 2025 waited a record 2.8 years since their Series A, the longest gap ever recorded. So I asked him, with time between seed and Series A now stretching past 2 years, what kinds of milestones are early stage investors looking for before leaning into follow-on rounds?
I think you have to first prove frugality, that you can invest in the right things and invest in the right ways of operating your business. I think second, you have to prove that you can build in an AI native way. You've got to create leverage for the capital you do have. And so I think, we're seeing far less hiring happening in the early days. And I think you have to see teams prove out their sort of resourcefulness, because when they take on the next bit of capital, how much leverage will it create? It used to be that we're hiring a bunch of people. Now we're going to be deploying, agents in some form or fashion throughout the business. And so I think you need to prove, frugality and durability, and then of course the leverage you can create. If you do those three things, there's a really interesting shift happening in what's possible. You're seeing companies get to 50, 100, $200 million in ARR in like record time. And so now the 4-minute mile has been broken on that. I think that's, a new bar for a lot of these firms, especially those that really want to anoint winners and back them for, multiple stages all the way to IPO and beyond.
Thank you to our brother, Jeff Becker, for coming on the show. I like this take. The new flex isn't just headcount. It's how much leverage can you get with these new AI tools. That's not something we would have said about probably 2 years ago.
Right. We've seen that play out. Some of these early stage teams are tiny, but they're building fast and capital efficient.
So yeah, funding's still out there, but it's just harder to earn. The bar's higher, the rounds are slower, and founders have to do more with less.
But if you can clear that bar, there's real opportunity on the other side. Well, that's it for Venture Daily. Thanks so much for joining us this morning. We know you're busy, and it means a lot to you that you chose to spend some time with us.
Absolutely. Before we leave, there was one story in the Wall Street Journal yesterday about Austin being so over. It's a dumb story. It's never been back. Harder than it is right now. Take it from us. We're in Austin. We love it here, and so it's goated. But
yeah, if we can speak some anecdotal evidence to the
yes,
people on the
power.
coasts, Austin's
Allen Control Systems
happening.
Go to those offices and you'll be changed. If you like the show today, whether on YouTube, Spotify, Apple Podcasts, leave us a like, a comment, a review. Throw us a 5-star rating if you think we've earned it. And as always, we'll see you tomorrow on Venture Daily.